Tuesday, January 21st. I think I say June a lot. Got a big show. We have Pelosi Trades. Pelosi Trades, high alert, Pelosi Trades. We got a lot of them. We got a bunch. We've got, let's see, S&P as Trump starts. We got some crypto stuff. I've got several names of any reaction is an overreaction in the market. So several of those. We've got NVDA. We've got Apple. Why is that down? Zip Trader recommended 3 stocks that will soar under Trump. We'll look at those. Earnings continuing to kill it. Social request. Because I did a live on Substack yesterday. And if you're not on Substack, go over here to the Linktree, linktr.ee/daily stock pick. You can, the Daily Stock Pick newsletter right here. And you can download the app. You can download the app from whatever Google Play Store. It is the #1 app in social media because TikTok got banned. This one just jumped up to the #1 spot. But I go live on here every now and then. Yesterday, I did go live. And I announced the Daily Stock Pick portfolio, 2025 portfolio. And it's 10 stocks and ETFs with percentages that if I had $30,000 and built a portfolio, here's what I would do. Can it beat the S&P? We're going to see. But I did go live yesterday with that. I will be going live again Thursday on Substack to have a stock battle with a Trendspider. The rules are 1 stock, 1 strategy in Trendspider, and 2 weeks. And we come back in 2 weeks and see which strategy actually worked out better. Did you buy and hold? Did you get out? Did you trade it? What time frame are you trading it on? Is it a 4-hour? Is it 5 minutes? Is it an hourly candle? Is it a daily candle for 2 weeks that you want to buy and hold? So we're going to do that. It'll be interesting because I think it's 3 different people, myself, Nader, and James, who will be doing just, hey, here's a stock. And then we come back and there's no egos involved because the market will tell you who won. So, let's take a look at the cues because that green line right there, that is off this weekly. That is the trend line and we continue to hold it. Even if we trade sideways, I would think that you would hold this level. I can't imagine us going down, but the RSI and the MACD are still extended. So expect volatility. That's all you can expect is volatility. I don't expect this to be a smooth sail ride up like we've had here since October. I expect some pretty significant pullbacks, and we haven't had it yet. You can take a look at the VIX and the 10-year. If we just go to the VIX right now is at 15. I have said before it was at 16 on Friday. I think it wants to go to 20 before it goes to 10. Okay? And then you take a look at the 10-year and you go and look at the 10-year Treasury. If we look at the 10-year Treasury, it's a 4.56. I think it wants to go to 5 before it goes to 4. And both of those would push the market down. It would put pressure on stocks. So I'm hearing again that bonds are the greatest investment of all time, and it's the time for bonds. I've heard that rhetoric before. I'll believe it when I see it. Right now, I just don't believe it. But there is a couple of good quotes here. So Peter Lynch, who is one of the greatest investment persons of all time, he works for Fidelity, and his Fidelity fund just killed it during the time when he managed it. And the quote that Oga's put in: know what you own and why you own it. Sucker is good and it's going up is not a good reason to buy. Remember, if you're just buying something because somebody told you, it's a trade, not an investment. You need an elevator pitch. Know what you own. If you're just buying, something because Nancy Pelosi bought it, but you don't know what the company does, that is a trade. That is not an investment. I bought MPLX. I still have no idea what portion of the energy sector MPLX is, but my elevator pitch is MPLX had enough cash and enough revenue to pay an 8 to 12% dividend during the time when the pandemic was on, and the price has continued to go up. It is in the core portfolio. It is a stock that I still personally own. Average purchase price, $8. Buy and hold. And I've been getting an 8% dividend since then. Okay? It's a good stock. So my elevator pitch on that, I didn't know what they did, doesn't make me, a person who's just kind of listening to a douchebag. But again, know what you own. Now, Trendspider allows you in their software program. I don't have it set up because I'm not a guy that follows Pelosi. But there is one stock in this little tidbit here that is rather interesting. I think all of these stocks are up based on her most recent thing. It does show up here in Trendspider. But TEM, and this is what's interesting, TEM, I don't know what this does. It's Tempest AI, but it is up 18% today. And the only reason it is up 18% today is because Nancy Pelosi announced she bought 100K of this, call options for January of next year. That's it. I mean, there is nothing other than that in this. And if you want Nancy Pelosi's full list and what she did, here it is in Seeking Alpha. Okay. But Trendspider allows you to put this in as part of, you can do what's happening now, unusual options, insider trades. You can do Congress trades and you can do Pelosi trades. There's one right down here at the bottom, Pelosi trades. You can put it on your screen and you can set up an alert. So when Nancy Pelosi files, you get a text and you can do all of that in Trendspider. There is so much more. As you watch me use the 4-hour algorithm and we look at this, see, the algorithm got you in Friday at $35. Okay. Did it know something was going to happen? No. Did it have confirmation? Yes. If this was on your radar, you've gotten it. Now, what would I do with TEM? I'd probably just hold back. I mean, there's no reason to buy this since it's really nothing more than just Nancy Pelosi buying. That's it. There was nothing else. Wednesday, they announced the national launch of FDA-approved CDX test. What do they do? Well, it's not covered by the quant, but let's see. They operates a healthcare technology company. It engages in providing next-generation sequencing, diagnosis, polymerase chain reaction profiling. I have no idea what any of that means. It's a market cap of $5.53 billion. It's got a short interest of 5.73%. 52-week range, just so you're aware, this is an IPO in June of 2024. It went to $79. Even in pre-market, it's trading at $41. Now, if you go and look at the valuation, are they making money? No. Are they growing? 32% revenue year over year. Profitability? 53% profit margin, but they're not making money. Go and look at their earnings. Okay, they announced, the announced date 11/4. Their next earnings, April 25th. Look at their financials. You want to see their financials? They're making $640 million in revenue. They're actually spending $729 million. So it's a company that's not making money. Would I invest in this? Absolutely not. But if you want to trade it, use the 4-hour algorithm. Okay, the average price target, 10 analysts cover this, $56. That's a 61% upside from where it is today. And Nancy Pelosi just said that she was buying it. Now, if you want the 4-hour algorithm and you want to get in on TEM, you can get it. Go over to Linktree. Again, Linktree is where everything is. That top link, it takes you to Trendspider. And you have 71% off. Okay? This top tier advanced, they extended this offer just for today. Make sure you get this offer because I don't think this is one's going to last. Again, I've said that before and then they bring back an offer. But this particular one, I think it's going to be done by the end of the month. And then you're going to be back up to paying $2,000 for this service. Okay? That's why I want you to get it. The Extreme Gary Bundle. Remember, it's Trendspider right there. And then you can go get the Seeking Alpha Bundle, which is premium, which is the quant, which TEM isn't covered, but there's thousands and thousands of stocks that are covered. And then you get Alpha Picks, which is a portfolio of stocks that just beats the S&P. It beats the S&P by quite a bit. Okay? So there's the bundle. That's it. That's all the ad I'm going to do. Just remember it's there. And if you want to put Pelosi trades on your chart, you can. See, Google is one that she bought. I own Google. Amazon is one that she bought. I own Amazon. NVIDIA is one that she bought. I own NVIDIA. VST is one that she bought. I would use Here's how you use Seeking Alpha, okay? VST. Let's go over here. The quant says it's a hold. It is up 4% on nothing more than Nancy Pelosi bought it. What does Wall Street think that it's worth? They think it's worth $170. It's trading at 178 right now. It's 52-week range. You're at the high. Are you buying at the high? Well, let's go look at what the quant says. The quant says the valuation, a PE of 68 is too high. But everything else on this looks good. And we can go and read the virtual analyst report, and you can see Vistra operates in a competitive landscape with several key competitors among them, Constellation, Talon, and NextEra Energy. Okay, and it goes over everything. These virtual analyst reports, if you're going to invest in something, this is your elevator pitch right there. And they update every night. Every night they update when these things change because the value of the stock changes every night. And I would argue, number two, okay, what's number one? One of their competitors. And then you go look at Talon Energy. The quant says it's a strong buy. The valuation, not as stretched. They're not making money, but they're expected to make money because their growth is significant. They are making money off of the money that they have. So it's a B minus as far as growth. And you can read the virtual analyst report. But let's see what Wall Street says it's worth. It's not at its 52-week high. Again, average price target, 255. And you're trading at 240. So this one seems to have more upside than VST. Constellation Energy might be one that you want. This one has gone on a run. It's not listed in there, but let's look it up. It's CEG is the Constellation Energy. Okay, valuation's an F. Let's see what Wall Street says it's worth. They say 309. It's trading at 324 right now. So again, I would argue that you could use Seeking Alpha that way to find better opportunities. And you don't need Trendspider. Find your own. I didn't use Trendspider at all on there. But if you wanted to add in Trendspider, you absolutely could. Let's look at TLN on here. Does it have a positive momentum? Absolutely. Look at that. The algorithm got you in here at 207. Okay. The MACD was super low. The RSI was at 52. Did it make sense of buying? Yes. 207, you're at 234 right now. Then let's look at Vistra Energy. Vistra, this one, fantastic. 142, look at the MACD down there. Look at the RSI. 142, you're trading at 180 right now, 178. It's a fantastic gain. That was just December 24th. Let's go look at Constellation Energy. I had brought this up. I thought this was a great buy at the 200-day at 229. Where are you trading right now? 316. I'm sorry, 324. And you bought here at 229. And I said, the algorithm makes you as much as buy and hold. It makes sense. 284% versus 282%. So the bundle between Seeking Alpha and Trendspider would have made you the at least the subscription price for both. So don't put these tools away and just don't use them. I got an email that a couple of people canceled their Trendspider after a year. What the hell's wrong with you? You can cancel it in the bull market, but when that bear market shows up, if you're not trading and that bear market shows, you want these tools. So get the tool while it's on sale. Learn how to use it. Again, if you're not using it, don't pay for it. But when the bear market shows up and you don't know how to use a tool and all of a sudden things start crashing, you don't know what's going on, that's when you're going to be like, Gary, I wish I'd gotten that tool. And then you're going to be paying $2,000 for this tool. So just understand Pelosi Trades are in Trendspider. They are good to watch. And if you don't get Trendspider, at least go over to Twitter and type in her trades. Get Seeking Alpha and then type in her trades in Twitter. You can find them all over the place. And this is the investment thesis in Tempest. This is that AI company. I knew nothing about it, but this is an investment thesis on it and why you should buy it. Am I buying it? Nah. Now, S&P, NASDAQ, Dow futures tick up as Trump 2.0 starts. The U.S. 10-year is down, so stocks are up. Trump took office before releasing 2 shitcoins. I mean, again, I have my own thoughts on the shitcoin. And just in case you're wondering, I'm not disparaging the actual coins. That's what they're called. They're called meme coins, and they're known as shit coins. So if you're not in the crypto world, they are literally known as shit coins because that's what they are. So, and he launched them on Saturday. There was one for him, one for Melania, making like 13,000. Dave Portnoy made close to $1 million. $1 million, I think he put $500,000 on it. He doubled his money within 24 hours. He said he bought at 5 p.m., went to bed, and at 5 a.m. he woke up, sold everything because he was up $1 million, and then he put $1 million on the Buffalo Bills to win the Super Bowl. That's it. That's it. I mean, that again, you can make money on this stuff. But would I be buying it? Hell no, I'm not buying it. I'm not a gambler. I don't want to gamble like that. But you can make money on that. Now, did we get all that we wanted out of Trump? We didn't get the Bitcoin, the crypto stuff, but it is what it is. Now, I want to say this. This is a fantastic 2-minute clip to watch. Again, it's Peter Lynch, the same thing. People are careful with their money when they buy a refrigerator or a plane ticket, but they hear about a stock on a bus and they'll put 5,000, 10,000 behind it. Again, don't listen to a douche on the internet. Do your own research. That's what he's saying. And that's the number one rule of this podcast. Anything that I say is not investment advice. It is simply a suggestion of what I've looked at over the last 24 hours and what I've seen, or over the weekend. So let's take a look at some of these opportunities that I say might be an overreaction. Abercrombie and Finch, look, it's down at 130. I do think that this is an overreaction of this stock. I think this is an opportunity. I think this particular one, even though you look and the weekly is still stretched. Well, I'm sorry, the weekly is not stretched. The weekly is down around the oscillator. Okay. And you're using that 134. It's broken its support. Do I think it has opportunity? Absolutely. Let's go and look at Seeking Alpha. Okay. Seeking Alpha thinks it's a buy. The valuation B, growth A+. The number one thing that in these 5 categories is the momentum. And it's broken down over 6 months and 3 months. So over the short term, it is incredibly weak. But every other metric in this, even the revisions, nobody's taken their earnings per share down. Nobody's taken their revenue down. When you go and look at Wall Street says this is $187 a stock price. It's 43% upside. Okay? I like this one. Is it an overreaction? Absolutely. Do I own this one? Yes. I own it as part of the Alpha Picks portfolio, but I will be looking to add to my position right after I get my Drakkar. Because again, I think back in the 80s, Abercrombie and Finch was the shit. It was what you wore if you were cool. And right now, I haven't been to an Abercrombie and Finch store. I'm 54 freaking years old. What am I doing in an Abercrombie and Finch store? One that I thought was an overreaction that has now popped up is VST. This one is trading because, again, Pelosi bought it. It's up 4%. This was a nice little pullback, okay? This was a pullback that was an overreaction. Look at that. It came down from 166, and you had the opportunity to buy at 134. I like this one. I like it a lot. Let's look at the short term. Let's look at a 4-hour algorithm. You had the opportunity to buy it at 142. Okay, got you out here at 137 in an upward trending stock. I would never get out of that one. But I love this stock. It's a good one. Another one that I like that might be an overreaction is Allstate. The fires in California, they're going to get killed. Allstate is still a good company. Overreaction? Absolutely. Look at the fire reaction on this one. This one went down to 176. The algorithm got you in at 188. Right now, you're trading at 190. It's on its way. If you look at a weekly on this one, it has broken down and it probably will start moving back up. If you look at Allstate in Seeking Alpha, average price target 223. That's an 18% upside. Okay. Momentum gets a C+ because the short term, it's a little suspect, down 3%. That's the fires. Another one, and we will go over this because Stephanie Link just brought it up, Schlumberger. Schlumberger, as it's dipped, we see it just broke through the 200-day. You had the opportunity to buy it here in the algorithm at $37. If you back test the algorithm on Schlumberger, okay, it's a technology energy play. But if you back test the 4-hour algorithm on Schlumberger, you make 26%. And you're saying, well, what if I buy and hold Schlumberger? Yeah, I'll make 26%. You lose 20%. That's the difference between the 4-hour algorithm and buying and holding. In stocks like this, that you may not know what they do, it's an energy company, but if you want to trade it, you will win 46% of the time, and your average win is 5.83%. Over 24 months, there are 26 positions. This fits my profile where you win close to 50% of the time. It beats buy and hold, and you can trade it. Okay, weekly, the MACD is super low. The RSI 52 in no man's land, and it's just started to turn around. Any reaction is an overreaction. And Stephanie Link here, well, let me close this real quick. Beat earnings per share with the highest EBITDA margin since 2015. Production Systems led with 9% margin, 300 basis points, digital TR to cloud, AI edge, new ACR. I have no idea what this means. It's all good. She owns it. I trust her. And then you look at this and you say, oh, 4-hour algorithm got me in at 37. Great. And look, even though it got you in here at 43, it made you 1%. Even though it got you in here at 40, it made you 6%. Got you back in at 40, made you 5%. You didn't trail this down. You kept buying. That's the good part of the 4-hour algorithm, is it puts these things in front of you. Okay, I like that one. So Schlumberger, again, buy the dip, find good companies. She also says Truist, TFC, story starting to play out. Investments leading to strong fee income, while net interest income is improving, plus 1%. Net interest margin, 9 basis points. Okay. Truist, let's look at TFC. Let's see what the chart says. TFC, because this is how you use these tools. I don't want RFC. TFC. There we go. This is Truist Financial. Now, algorithm got you in at 43. Where are you trading right now? You're trading at 47. Now, the algorithm makes you 3.2% over 24 months, over, 28 positions. It doesn't do great, but the stock hasn't done great. So you look at this weekly chart, we've just gotten to the 200-day. The 50-day is moving positive. Look at this. If you bought this at 36, now you're at 47. If you bought this January of last year at 36, you're doing really, really well. If you bought this in January of 2023, you're not doing so hot. So timing does matter. And when you've got a positive moving 50-day, you've got Bollinger Bands that's cinched up, and you've broken the 200-day on the weekly, maybe Stephanie Link has something there. And maybe the 4-hour could lead you to more gains than just winning 25% of the time. Okay, you've got this gap here between 45 and 46. I would enter if it pulls back in that gap. That's what I would do with that one. But again, this is how you find these things. Following people that you like and respect. Stephanie Link is one. Trendspider. Did you sleep on Cryto? Did you sleep on it? Have I mentioned this one? Cryto is a semiconductor company, okay? They make custom semiconductors like Broadcom. This is one that I decided, okay, in the top 2025 stock that I have for daily stock pick, this is one of them. This is one of them in those 10 stocks that I'm buying to try and beat the S&P during 2025. Cryto. Why? I should leave this for just the paid subscribers of the newsletter because I did it yesterday, but let's go look at it, okay? Let's go look at it because the valuation is a B-, the growth A+, profitability is a D. It's number 1 out of 66 in semiconductors. Okay, 52-week range, you are at the high. What does Wall Street think that it's worth? They think it's worth $78, so it's 2% down. Can it go up? Absolutely, it could still go up. But you're buying at the highs. I outlined the strategy of what I would do if I were buying this one to try and beat the S&P. Let's go look at the charts, because this one is a direct competitor to Broadcom and Marvell. And that's in the virtual analyst report. And you should go read. If you have Seeking Alpha Premium, Go read the virtual analyst report on Cryto. But let's take a look at this one. The algorithm makes you 224% over 24 months. You may be like, oh my God, that's awesome. But if you bought and held, you made 508%. The algorithm wins 50% of the time. Your average win is 30%. Just got you in at 77. Boy, you're trading at 83. That's fantastic. Look at the MACD reset. Look at the RSI at 64. But take a look at the weekly. And that one's tough. That's tough to say, hey, the MACD is 12 points above the oscillator. The RSI is at 75. It's tough when the Bollinger Bands are that wide. Personally, I'd wait for it. But again, you keep chasing the laggards, we'll stick with the leaders. Look at that earnings gap and it takes off. This is from January 9th. High-flying semiconductor stock holding a beauty of a power earnings gap while the rest of the sector struggles. It was outpacing the sector. And they posted that on January 9th when the stock, let's see, January 9th, the stock, let's look at January 9th. The stock was trading at, let's see, 69? And you're at 83 now? Follow them on Twitter. They have, even if you don't subscribe to them, they have such good charts and such good analysis. Go and find them. Bank of America spotlights 4 bulls and 2 bears. I thought this was interesting because the bulls, PayPal, just FYI, most recent portfolio that I follow that is part of Seeking Alpha, most recent buy. Price target of $100 to $103. McKesson, target of $790 to $800. Now, they did put in some bears, and one of the bears is in our core portfolio. It's Eli Lilly. Price target of $500 to $471. This is one that has come under fire of recent. Do I think it's worth the pullback? I wouldn't be buying this right now. The 4-hour algorithm has you out. I'd be waiting for some type of entry there. Now, the MACD looks fine. The RSI, it's completely oversold. But when you look at the weekly, we still haven't made a turnaround. Your 200-day still moving positive. We lost that 794 support. I would be looking at this 650 as the new support level. And if you want to get into this, again, if you look at Eli Lilly as in Seeking Alpha, it's expensive. I mean, I say that I won't buy Costco at 50 times forward earnings. This one's at 55. And so, the growth, unbelievable. Again, you may hate the food companies for getting us addicted to sugar, but there's so many people who will just take one of these GLP-1 pills. And make no mistake, when that pill comes out from Eli Lilly, these guys will double their revenue. Medicare and Medicaid will be forced to pay it because they're going to get approved for absolutely everything. You have a hangnail, GLP-1. You stub your toe, GLP-1. You sit on a tack while at work because somebody plays a joke on you and puts it on your chair, GLP-1. That's the way they're going to do it. So do not count this one out. I do think that is interesting that Bank of America puts this one in. The other one is Target. They just kind of everybody's given up on Target. And I said, my one of the greatest things that I should have done that I didn't do, but I got out with a profit, was when I started shopping at Walmart instead of Target. Just buy freaking Walmart stock. They got so much better. And you can look at those two together and it's just, Stephanie Link, smart semi-piece from Barclays today, general purpose versus custom silicon. Both have room to run. NVIDIA and Broadcom. Both have room to run. Now, I will tell you, I own both of these. I own both of them, not expecting either one to double in the next year. If one were to double, I think it would be Broadcom, not NVIDIA. And I think that's just from a mathematical perspective. We're going to go into Apple in a little bit. Apple is $4 trillion company. NVIDIA is close to a $4 trillion company. There are only 3 companies that are even close to that in the world. And if you think that that NVIDIA can double, that would mean it would be an $8 trillion company, and that's never been heard of. And I don't think that they can do that. Do I think they can get 10, 15%? Yes. Broadcom's a $1 trillion company. They just passed that. Could they go from 1 trillion to 2 trillion? Absolutely. It's not like somebody's switching from NVIDIA to Broadcom right away, But when you look at what the custom chips that Apple's doing, that Amazon's doing, that Google's doing, that Meta's doing, all of those chips are going to be custom, and it's going to be AVGO. And FYI, it's going to be Marvell, and it's going to be Cryto. So when you look at those, that's what I want you to look at. Look at the market cap. Look at the overall thing. And that's why you have these tools. You want to take a look at the competitors. You want to take a look at the space. You want to take a look at the charts. Broadcom, their MACD has just reset. It's down at the oscillator, and the RSI is at 61. The algorithm just got you in today at 237. Okay, it's trading at 241. When you look at the weekly, it's still stretched. I bought throughout last year at these places. Okay, I bought here, I bought there, I bought there. Was it stretched? Absolutely, it was stretched during those buys. But those were 4-hour algorithm buys that I just wanted to get in. And they were around 130. 130. And I bought this dip down here at 120, 129, 130, somewhere around there. 130 was my price, and that was where I was willing to pay for it based on the valuation. So I like semis. I have them both. I think both are good. NVIDIA leads Tesla, trails among Mag 7 in earnings prospects. I agree. I think NVIDIA is just a no-brainer. Do not go out and put the majority of your portfolio into NVIDIA. I think that's just a fool's play because I do think that it's a bit expensive, but it's not overly expensive. This is a play here in NVIDIA at 136. You can clearly see when you look at the weekly that this chart is just putting in a kind of a sideways trade. The market just opened, so the data is getting a little bit slow here on Trendspider. But you can see we're bouncing right off that 140, and it's using it as resistance. At some point in time, this will use that as support. Okay, when you go and you look at NVIDIA, when we look at this, what does Wall Street think that it's worth? Let's go and look. Wall Street says it's worth 173. That's 25% upside. They don't have a problem with the market cap. You know, you look at the only thing is the valuation, 46 PE. But when you look at the PEG ratio, which factors in growth, it's 1.22. And I think it's Peter Lynch or somebody only buys things that are under a 1. That's close enough that he may actually buy that one. Now, Tesla is a different story. Tesla, when you look at their valuation, it's 172 forward PE. And their PEG ratio going forward, 18. But what you have on this side is the momentum. And the momentum is unheard of. 93% in 3 months. 6 months, you're up 71%. 9 months, up 174%. And I continue to say, Tesla, you can trade it in the 4-hour algorithm. And Tesla is a very good trade in the 4-hour algorithm. It was beating up until October. It was beating buy and hold. Right now, buy and hold gets you in at 272% over the last 2 years. The MACD is down below the oscillator. You're making 215%. You win 52% of the time on 21 trades over 21 months. It got you in at 408. You're trading at 423. I have said this before. If you can get this under 400, I think it's a buy. Even when you look at the weekly chart on this one, it looks extended. So I would be very careful with that one, but I agree. NVIDIA, I think, is just a better buy. This is a great Instagram clip from the Compound from Animal Spirits podcast, and it goes over the top 20 S&P companies at the beginning of 2000 versus today. Okay? I don't know that well, I shouldn't say I don't know. I can almost assure you that the top 20 stocks 20 years from now does not look like the top 20 stocks from today. Apple will fall at some point in time. Google will fall at some point in time. Meta will fall at some point in time. Tesla will fall at some point in time. It's not about picking the 20 companies today. It's about finding that winner 20 years from now. And that's what I did with Apple. And so you've got to find those winners that you can build into your portfolio. Add to your winners and cut your losers. Apple, even though it's down today, is not a losing stock. Does it have the characteristics of a loser? Absolutely, in the short term. Look at this at 260. I told you sold here at 257, and it's using that support at 228, but it's broken through that. We're at 223. So right now, where am I looking for Apple, for support in Apple? Look, the MACD on the weekly, super high. I'm looking at that 50-day at 213 as support. And if it breaks that and goes down, look at these last few times that it's broken the 50-day. Was it a good buy then? Yes. So long term, I'm not giving up on this. Short term, it hurts, but I'm not giving up on it. Apple's iPhone sales fell 18% in China, and that's what's killing the stock. It's down 3%. I guarantee I look at my Fidelity account today, and I'm losing more than most people will probably make during a year in just a day. So, if you're into crypto, Trump launched, like I said, this crazy Trump coin. You can follow it in Trendspider. So this is Solana soared, and then it crashed. So crypto is in a nightmare right now. But let's see. Let's go and look up the two favorites that I have. And we can go. In fact, right here, Charlie from Zip Trader. You can go watch this video. I will put it in the newsletter. It is absolutely a great video because he goes over 3 crypto trades that are set to explode with Trump. And I agree. Okay, the first, IBIT in my mind is an absolute winner. I think IBIT is an absolute winner. And this one is up at 59.20. It's down 0.7%. We hit a high this weekend on Bitcoin, and it pulled back as they launched the Melania coin. I mean, the Trump coin pushed it up to the all-time highs. Then the Melania coin was like, hey, it's a total grift. That is it. Look, the algorithm got you in at 56.41. You're trading at 59. The algorithm makes you 57% buying and holding over 12 months because this is only a 12-month-old ETF. Makes you 113%. Just buy it. Just freaking buy it. The algorithm wins 50% of the time. I keep adding when the algorithm tells me to add. I just don't sell. But the 3 stocks that Charlie goes over as Zip Trader is Coinbase. He says Coinbase is ready to explode. Coinbase is down 0.73% right now. I agree with him. The chart looks decent. Friday, I did buy quite a bit of CONL, which is a leveraged ETF. I went against my rules, but I thought we were going to get a crypto executive order. We didn't. When we do, we might see Coinbase just fly. And so I'm willing to hold that double leveraged ETF at quite a big price. I bought it, at 294, 297. I forget what I bought. No, I didn't buy the coin, but I bought CONL. But the algorithm makes you 269% in this. It got you in at 276. So over 26 position over 24 months. It provides you some level of safety. The MACD is down below the oscillator, but when you look at the weekly, it's a bit stretched. Not crazy stretched, a bit stretched. All-time highs back here, close to 400, and you're trading at 291. I don't think it's out of the realm of possibility. This one continues to go up. The other one that Charlie brought up, which I was not aware of, this is the second largest Bitcoin holding company, and it's also a miner, so they continue to add to it, is Mara, M-A-R-A. Okay, I don't like the algorithm on this one. It does make you 73%. It wins 36% of the time, but it trades too much for me to feel comfortable with it. So if you want to get into this one, this would be a buy and hold for me as well. Mara, I am not in this one. I have gotten out of this one. I traded this one. I think I wound up taking a little bit of a loss on it, not much. The MACD below the oscillator, the RSI at 52, not bad from a technical perspective on the 4-hour. The weekly, it's just fluttering around this $18 to $19 mark. It got to 83 back here in November 2021. Can it get there? Absolutely. It shows you that it can get there. It's expensive. Make no mistake. This is a valuation of a company. They're growing revenues by 131%, but they're not making money. Okay, what does Wall Street says that it's worth? They think it's worth $27, which is a 40% upside. So Charlie thinks that that's one. The other one, which I do agree with, and I own a double leveraged ETF on this one, MSTX, is MSTR. I own the double leveraged ETF, MSTX. Okay, but MSTR, he says, Michael Saylor has been buddy-buddy with Trump, and he agrees that, yes, it's a Ponzi scheme, But if Bitcoin is going to go up, MicroStrategy is going to double go up. It's just going to be a leveraged ETF. Okay, you're trading at $380. It is down 4%. But this one, if you want to trade it in the 4-hour algorithm, you can absolutely make money. It was beating buy and hold. Right now, buy and hold beats it almost by double, 2,000%. You make 1,260% if you just use the algorithm. Algorithm got you in at 348. Pretty happy, even though you're down 5% at 380 today. You know, we'll wait to see. See, the MACD is down. It's at the oscillator. If you look at the weekly, it's still stretched. So could it go down? Absolutely. Absolutely. You've got to have diamond hands to trade this one. So personally, I like the risk of ETFs. I like IBIT. I like, MicroStrategy. I own this. I do trade these. IBIT is the one that I hold. Now, earnings this week. 3M. 3M did a great job. They beat. They're up 3%. This one I called. I said, they're on their way. If you look at the chart on this one, and we won't worry about the fundamentals because right now you're looking at a chart for this one because I do think we're getting ready to break out. You can see that 131. We've broken out above that. Where did that 131 come from? If you go to a weekly chart and you look at it, that is a previous all-time high back here in May 2022 before it just started it started going. It was a lower high, but it put in a nice little shelf and it was using it as resistance. Now you've broken out above that. And now you can absolutely assume that we're going back to the all-time highs at 171. So 3M is one to watch. They just had their earnings. Wait a day, 3 days after earnings, go and buy it. D.R. Horton, Q1 tops earnings. They're up 2%. Again, another home builder killing it. I mean, it makes sense. It makes sense. Earnings are coming in strong. Charles Schwab killed it on earnings. Cash rises up 6% over $80. Longtime listeners will know when that CEO bought at $50 and it dipped down to 40. I said, buy it on the 4-hour algorithm. Buy that dip because it's going to be an $80 stock. You doubled your money. A couple of years maybe, but you doubled your money in a bank that is a solid bank. And with banks being unregulated at the current time, it might be a good time to do it. So earnings, let's go and look at Earnings Hub this week. If we look, we got Netflix coming up after the close today. I may be live today on Substack. So if I feel like it, I'll go on there. You have United Airlines, which is a top pick in Seeking Alpha. You have J&J tomorrow, Procter & Gamble, GE Vernova, which should be a good one. You got Discovery. And then Thursday, we have GE, we have Union Pacific, we have American Airlines. We've got a lot. This is the start of earnings week. I mean, next week is big tech earnings, but even this week with Netflix, it kicks it off. Next Wednesday, you have a Fed meeting. You have Tesla, you have Microsoft, you have Meta. That's the big one. Okay. And then Thursday, you have Apple, you have Visa, you have Intel, which people will be assuming that Elon's going to buy Intel, but you have a lot going on. So earnings will be big. So tune in, get that Substack app, join me live, get the alerts, blah, blah, blah. I did release, like I said on the newsletter, I did release a 2025 stock portfolio with 10 stocks where I want it to beat the S&P. And what's interesting is Ryan commented back, one of the stocks is an energy stock. And he said, great suggestion. He basically gave me a elevator pitch on UTES. And what's interesting is he gave me this video, and I'll include this in the newsletter for you to watch. This dude doesn't ever look away from, he's reading a script. The guy on the left, absolutely 100% is reading a script, and he never looks away from the script. And they tell you on SNL, when you do SNL, they tell you one of two, you can look at either the actors or the cue cards, but when you look at both and you go back and forth, it looks awkward. So that's what this guy does. But UTES is the one. Let's see. Ryan pitches it. Seeking Alpha Quant 4.89, expense ratio 0.49. A little bit expensive. That's high, but it's only active managed utility. It's the only active managed utility ETF. Its top 4 holdings are companies you want: VST, CEG, TLN, and NEE. The fund is aggressive and aimed towards capturing biggest slice of the AI power demand possible. The fund manager calls it an offensive alternative in a defensive sector. UTES, 4-hour algorithm, makes you about as much as buy and hold, 28 positions over 28 months. Okay, 35% versus buy and hold makes you 39%. It's an ETF. So I wouldn't actively trade this one, but as you come down to that 200-day or below that 50-day, look at how great those buys are. Okay, the right now the MACD a little bit extended. The last couple of times it's gotten up here, it's pulled back. The RSI at 76, maybe a little bit extended. Weekly is significantly extended. So not saying that, hey, this is one that is wrong. But when you look at UTES, again, strong buy from the quant. Momentum, which is most important, is an A. Expenses, it's a C. But it's an actively traded utility ETF. It's ranked number 1 out of all the utility ETFs. Significant. You can look at FXU. Again, you can use Seeking Alpha to find these types of ETFs. Look at FXU. And let's look at the expense ratio on this one. It's 0.63. It's even more. So there are 12 ETFs in this sector that you can look at. And I do think I like Ryan's elevator pitch of UTES. I just think at the current time, that's a bit extended for me. If it pulled back in the 60s, I would probably think of buying right there. And it's a buy and hold. I mean, make no mistake, it's a buy and hold. We have quite a bit of a few scans. And if you're looking for scans, they'll be in the newsletter. Meta, Google, NVIDIA, Broadcom, Rivian, Kraft Heinz, Fortinet, and Energy. We have a short, triple leverage DTF, SCO, and KOLD, and in leveraged ETFs, quite a few. So if you have any questions, hit me up. I've been going for quite a bit. It's 46 minutes, and I like to keep it around 45. So any other questions, hit me up. Remember, don't forget Trendspider and that Seeking Alpha bundle. They are a limited time only, so sign up today. Make sure you're getting it. Okay.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now.